I'm Glenn Freeman from Morningstar, and I'm joined here today by Kerr Neilson, co-founder and managing director of Platinum Asset Management. Kerr, thanks for joining us.
Thank you very much, Glenn.
Kerr, what's your view on the rates of global indebtedness, both from a corporate and from an economy-wide perspective?
It's made the world just that much more sensitive to interest rates. And you saw evidence of this when we got the first rate rise late last year, and the markets lost their hearts and heads. And I think that's the real problem. And secondly, it's not evenly distributed. So if you look at Wall Street, for example, there's a whole host of fine companies with no debt, in fact, huge amounts of cash, some of it offshore. But then there's this very large group that have taken on more debt. And so it's concentrated, which makes it more dangerous. And overall now, the corporate sector in the States is 30% more geared than it was in 07, 08. Governments, of course, have taken up the slack and become much more indebted. And so their opportunity to take action is diminishing, but it's far from over. And then you've got the sort of really difficult countries like Japan, where it's 350, 400% of GDP, debt to GDP. And of course, China's bringing up a far second here, where they're taking on a lot of debt, both at the corporate sector. Now, the central government is inheriting debt from others. Mm-hmm. So it's small now, 50, 60% of GDP, but it's picking up speed.
Sure. The Australian currency has been trending downwards in line with our official interest rates policy. How does this play into your investment approach?
Right. Of course, when looking at currencies, we tend to look at the bilateral rates, so the Aussie versus the US. And we run many currencies, so we tend to take a little more sort of peripheral view of that. But against the US dollar, we've been observing that when rates start going up, perversely, the currency starts losing some of its momentum. And its terms of trade, because basically it's growing faster than the others, there's deterioration, so you see the currency coming under pressure. And the oil price is more of a negative, so a higher oil price is more negative for the US than a positive. But having said that, the real problem we face here is that we have a current accounts deficit. We see our resources as not having the same pricing power as before, because everyone put in more capacity, ourselves and everyone else. And indeed, we can see how our economy could well slow down because of the resource investment now coming to an end, and then this building boom coming towards a much slower period. So our rates are going to come down as well. So that's one attraction that the Aussies had. This nice idea, a nice yield you picked up on being an Aussie. And we see as that comes away, which we think is imminent, and has already started, obviously, the Aussie might bounce a bit, but then ultimately it goes quite a lot lower. But in the meantime, there have been all sorts of plays to be had on, owning the NOK, owning, so it's Norwegian kroner, owning the yen, which we've done, and now we've been reducing our yen position. We happen to increase our position in euros. So there are a few more moving parts than just the typical dollar US mix. Yeah.
Do you have any sense of how many SMSF investors make up your retail client base? And has this been increasing over the last 3 to 5 years?
It has, but I couldn't give you the numbers offhand, but it's certainly a big share where people, we put them in the category of controllers. They're interested in the market and they want to run their own affairs, and that seemingly has been growing. That's against the folk who just want to leave it to someone else. They just hate the idea of actually getting involved in financial markets. Sure. So it's a sort of client you attract because what we've done is spend a lot of effort on communicating as openly as we can with the clients. I seldom use the word education because, frankly, you can't re-educate fear and greed. You can try and modify it, but it's as far as you'll get. You can't go to a re-education camp, I don't think. But what we're trying to do is give people an understanding of the excesses when they start building, and then give them some forewarning. Yeah. So, for example, on the Chinese banks, we're making it very clear they're going to have huge write-offs. magnificent proportions, 10, 15% of their loan books completely written off. So we try to get that out into our literature so that when it happens and they see it on the front page of the paper, they don't overreact. But of course they still get that daily buffeting of information which frightens them.
Sure. Morningstar research has consistently shown platinum is underweight offshore markets, particularly the US. Can you talk a little about why you've maintained this approach?
Yes, it has, and to some extent I think we should have had more. You know, I think if you want to be very critical of oneself and say, well, but what we were always doing is finding better value elsewhere. And it shows, because in the last 5 years we've slightly underperformed, but we've been 75% invested. And if you look where we've been invested, it's sort of ghastly markets like the emerging markets and so on, which have gone down in that period, while the Wall Street's gone up about 65, 70%. So it's a tribute to our stock selection, but maybe not enough macro input. Whether we want to change that is dubious. I don't think we'll be making any changes, particularly now, where we think the valuation gap is so large, with the US on cyclically adjusted earnings of 26 times, and the rest of the world, you know, much more like 15 to 17 times cyclically adjusted, whereas on just standard Ps, standard accounting, gap accounting, the States is on 19 times and Europe's on under 15, and the emerging markets more like variously between sort of 10 and 12. So there's a huge arbitrage there, and we are guided by that, because when you're starting on a low valuation, it's more prospective than when you're starting on a high one, unless you've got some extraordinary companies. And the whole market's unlikely to have extraordinary companies.
And just lastly, which countries is platinum most bullish on? And what's your outlook for market performance for the rest of 2016 and into next year?
Well, I'm a bit of a spoilsport here, because I don't think it's the best way to look at things. I think it's better to look at industries, because there's so much competition now that is trans-border. So even, you know, the S&P derives 50% of its earnings offshore, S&P index. So it's better to say, what are the interesting industries? And I think pharmaceuticals are very interesting, because right now there's a bit of a cloud over them should Clinton come in, President Clinton, if she becomes one. And there's the concern of healthcare costs. But, you know, medicines, actual drugs, are about 16% of the US system's costs. The rest are legal fees and specialist fees and, you know, the whole operation of the infrastructure of hospitals and nursing homes. So it's a bit of a, you know, difficult one to nail down, particularly as you get the sort of lobbying from that thing. So that's one industry we like. And then, you know, we love some of these IT companies in China, which are actually on par or slightly ahead of some of the Americans, like Tencent with its WeChat platform, which is designed on mobile from the very start, and so it is really very advanced. It has apps within apps and all sorts of things. And these stocks are growing at 30%. They're not cheap, but, you know, 25 times next year's earnings, which is not cheap. But we think they can just hold those valuations for quite a while and continue to grow at very high rates.
Sure. Kerr, thanks for joining us tonight.
My pleasure.
I'm Glenn Freeman for Morningstar. Thanks for watching.